Though markets have calmed in the aftermath of the weekend drone attacks on the Saudi oil facilities, there's still a nervous tension in the air. The price of oil hasn't yet initiated a fresh leg higher, but at the same time, it's hanging out near the recent highs, consolidating gains. There's plenty of worry around the impact of higher oil prices on the global economy, particularly in light of the stress this would place on central bankers needing to contend with the consequence of rising inflation. This, of course, would translate to less flexibility for a lower for longer policy strategy, something that would not be well received by investors who only want to see the free money run continue. Saudi Arabia has said the damage to their oil facilities was worse than expected and could take weeks or even months before the majority of output is restored. And so the market is nervous at the moment, but also still trying to find comfort in a more favorable outlook on the global trade front amidst optimism for a US-China deal. There's also been an uptick in sentiment with President Trump announcing an initial US-Japan trade accord. On the FX side, things have been tame, though the euro is coming out of a Monday trade on the back foot after suffering from a wave of dovish commentary out from various ECB officials. Softer than expected U.S. empire manufacturing data did, however, manage to invite some support for the euro into the dip. For today, key standouts on the calendar include German and Eurozone ZEW readings, U.S. industrial production, and the New Zealand GDT auction results. Earlier today, the RBA minutes were out and presented as expected for the most part. There was some selling, with some participants feeling a little more dovishness on account of the language alluding to a readiness to ease monetary policy further if needed. That's all for now.